Hello and welcome to another edition of Better Informed. Last week we discussed the compelling reasons why buyers might be out in force at the moment, driving demand in the market. That's the focus of the mind on the home after lockdown and affordability factors such as lower interest rates, lower purchase prices and lower deposit sizes for first-time buyers. But what about sellers? A number of people messaged me after the last video and asked me, why would people be selling today in what most of us agree is very much a buyer's market? Well, I think the first thing to say on that is from a real estate professional's point of view, it is not my place and it's not a broker's place to force any of our clients into selling. Our job is to understand the circumstances that the client is operating in and then give honest advice on what their options would be, whether that be hold on to a property for a while longer, maybe rent it out or living it, or sell it in today's market. So why would somebody sell in this market? What are the compelling reasons that actually it might make sense for somebody to actually liquidate their asset here in Dubai in 2020? Well, firstly, it's probably the most obvious one. We have distressed sellers, people that have very sadly lost their job or may need the money to come out of their property to be put into their business. Now, there's probably less distressed sellers in the market than many buyers anticipate. However, it is this class of seller that tends to dictate where market values are at any one time. Secondly, we've got those people in the market at the moment who are actually looking to take advantage of the market and trade up. As we said, it is a buyer's market and smart money in these times look at the opportunity to buy bigger properties at current prices. The trading gap between a smaller unit and a bigger unit becomes more attractive in times such as these in buyer's markets. I'll just run through some of the numbers. If you'd purchased an apartment for 1 million dirhams, say 3 or 4 years ago, a like-for-like villa might have been roughly 3 million. So the gap between the two is 2 million. You've got to find 2 million dirhams to jump from your apartment into your villa. Today, if we say prices have dropped, say 20%, that apartment you're going to be selling it at 800,000 for a loss of 200. However, the same villa at 20% reduction would be now worth about 2.4 million. So the gap between 800,000 and 2.4 million is now down to 1.6. So you've actually gone from a 2 million gap to a 1.6 million gap, and it's a saving of 400,000. Thirdly, currencies. And this is something we've discussed a number of times over the last couple of years, but the strong dollar, of which the dirham is pegged to, means that for many expats, selling a property here in Dubai and sending money home now can be a very, very good and compelling time to do so. If we look at some of the key currencies that we operate with, the British pound, the ruble, and the rupee, all three of those currencies are trading roughly 20% lower than they were in 2015. And that will certainly mitigate some losses that some sellers might feel when they sell and they send their money home. It's probably worth just taking a second as well to remember that the US dollar is a safe haven currency. And in the troubling times we've been through has strengthened as investors look for safe havens to put their money. As the world comes out of the pandemic, we would expect the dollar to soften a little bit. So people looking to wait for the next 5 or 6 months to sell, if they are transferring money home, they might want to consider their currency markets when they do so. And finally, we are speaking to a lot of investors in particular who are looking to sell properties today, quite frankly, to reinvest. If you'd purchased a property for 1 million dirhams again, you're renting it out at 60,000, you're getting a fairly healthy return, gross yield on that of 6%. Today, in today's market, the rent on that property may be 40,000, which is giving you a return of 4%. If you were to sell that property, that 1 million property that you purchased a couple of years ago, at a 30% reduction in today's market for 700,000, you could use that 700,000 and put that in to purchase 3 properties using leverage, using bank loan. Now, interest rates are incredibly low at the moment. You'd be putting in about 175,000 dirhams per property and purchasing 3. If those 3 purchase prices were 700,000 and you're renting at 40,000, that again gives you that more healthy return of 6%. However, remember, you're putting in 175,000 of your cash into each of those purchases. The return, the gross return on each of those properties against your cash outlay is actually 23%. Now, obviously you have to take into account mortgage costs, and you're going to have to take into account service charges, but you can understand why a lot of investors at the moment are liquidating certain assets that they do not feel are performing particularly well for them to buy others. So if you are thinking of selling at the moment and you would like to message me directly, please feel free to do so. Otherwise, visit us at www.bhomes.com and speak to one of our community specialists. Thank you very much.